Hey everybody, Day Trader Rockstar here with you. Bringing you a great video here. I've been doing a lot of coaching recently, talking to a lot of traders. A lot of traders, very interested. They see the beauty of the divergence methodology, and want to learn a lot more about it. And I love that. I love being able to really break down the the um, the method. The methodology. I call it the methodology. It's based on a set of rules that have developed over the 25 years of trading experience. And um, you know, the truth is, it's pretty funny. Yeah, I did this video just before, and I got on here and I was talking about my experience growing up and how I was involved in everything in trading. Back in the 1990s, early 90s, and stuff. And how over time I had to try to find my own way. Um, you know, find my own way by not knowing where to go. Being new to the markets and being overwhelmed by all these things. And even back then, it was like you had all these chat boards and like Silicon Investor, the Raging Bull, all these crazy boiler rooms, scams. You just didn't. There was no regulation. We're trading in fractions. It was kind of crazy time, but it was. You learn as you go, and the markets evolved through that, evolved into regular. Where we are today. Basically no floor traders, and things have really changed. And a lot of algorithms and stuff, and people still try to make money in the markets. But this market is more complex and more difficult. And it's not made for the average person. When I say average person, I say to most of the people out there listening to this, because, you know, um, this is the real thing. This is where trillions of dollars are exchanged and made and lost, um, investments and stuff like that. And you're getting into this game where you're dealing with algorithms and AI, black boxes, really good stuff. Who knows what's out there that can see your market orders and stuff. It becomes very difficult. And what you don't have going for you is these things that are working, they don't have emotion, and you have emotion. And most traders will fail because of certain things. All right, they don't have the discipline or the patience, and they'll overtrade. And I stress this so much during my show every day, daytradingradio.com. Daytradingradio.com, just to get that out. But hey, you probably, if you're getting this email, you probably, or getting the video, you probably understand and know there is a path to making money in this market. And that's what I've developed over the years. And I've tightened it up so much to where we could now look at a set of lines and really kind of understand where the market's going to go, where the strength is. Looking at these lines day in and day out for 8 hours a day. And even look at me at night tonight. It's like 10 o'clock in the night at night on a Friday, and I'm looking at charts, and I love it. And that's me. Not everyone's going to have that personality type, but the one thing you have to do is control your fears, control your become disciplined. And when I say discipline, you have to be patient. Patience in this market is so important because it's always there. It's like walking into a casino, and you have money in your pocket. And you could stop at any table. You could put the money into the slot machine and pull the handle. There's always a chance for you to make money in the markets. There's always, the hardest thing is being there and seeing the market run from you, and then you get in, and then it pulls back, and you get chopped up, and you fall outside your boundaries, your rules. You get emotional, you get excited. Yeah, I get it. I do too. I want to get into the markets as much as you do too. But I've learned over the years that certain setups work fantastic, and they don't always show up. And most of the time they don't show up, you're trying to trade the markets where you're going to be getting chopped up or chasing the market or trying to short a spike or trying to catch a bottom and stuff, and you're not waiting for a mathematical sign, a logical mathematical sign that we go over every single day in the market. We know exactly what it looks like. All right, we know exactly what it looks like and how it reacts and where we should put our stop. And what we look for, everything is defined. How many candles we want to do, where do we want to take profits, everything. Yet most people will kind of stray from that. They'll take it if they see it, right? If we happen to be on the air, and they'll say, "Oh, is that a bear flag?" Yeah, that's a bear flag right there. Now, there's something like this. This is an example. All right, let's talk about this for a second. As a trader out there, in this video, is going to come with a set of rules. And the rules are these little things I don't talk about. I put out lessons a lot. I do the coaching, I put out lessons, and I love teaching one-on-one. I mean, I like to do that because it's very important for me to kind of get my points across and show you examples and show you why things don't work and why things work. Because that's, say you, and I use this as an example because I've done the studies on this, and if we set our parameters or our criteria for a divergence really high. Our criteria is going to be a little bit higher. I mean, we're going to look for a certain angle on the divergence from the low to the higher low on the stochastics if it's, if we're going to take that type of divergence. And I might be going too fast for a lot of people out there because I get, I do this a lot, so I apologize if I'm going too fast. But if you want to find out more, just hunt me down, all right? daytradingradio.com. I have plenty of beginner videos and don't mind talking to anybody. But the important thing is to confine yourself into a set of rules that I've personally taken 26 years to put together that will show you things will show you where markets shifting, our pivots areas. That's where we want to trade. My goal is to put you in the market on a short-term basis. We do this also for long-term stocks, swing trades and position trades. The whole system works like it should, just on different time frames. So the same techniques we use here on a 1 minute time frame to profit on a 1 minute, 1 minute time frame. Like you're sitting in front of your computer and you're trading. You have time to trade during the day. So you're like, all right, here we go. I could trade. I'm in front of the market. How do I make money in the market? Well, you got to push the button. At one point, you got to push the button, right? And I'm showing you where to push those buttons and why to push those buttons. Why you should be short here. Why you should probably start taking your profits here. Why certain things are going a certain way. And we kind of read this every single day. And you can put it on one hand how many setups we look for, because those setups work almost every time. And we know now, over years and years of research, is when they don't work, why didn't they work? Is there something we could see in that tells us that it didn't work? And yes, that is too. That is true too. So hopefully I could show you some of these examples. But I'm about making these rules. I'm working on them right now. These are important rules that, as you're trading, to remember these. This is super important. I'm going to show you a couple of them right now, because I'll show you when I bring up the situation, I will bring up the rule and we'll discuss it, because I want to do it that way, because I'll just go down. I want to look at some charts right now. So again, just randomly on here, this is what we call a bear flag. All right. And the concept between the bear flag and what a flag is in general, when people hear what a flag is, well, people that look in the book, what a flag is. It's a pattern that moves up. It's usually a trending pattern, meaning that it happens in a trend. I call it a continuation pattern because it usually is a pausing mark in a chart that's going up or down, and then it continues. But there's a way of reading that. So when you do have a trend, a series of lower highs and lower lows, and you kind of see how this is developing, and you can just put a rudimentary 1, 2, 3 pattern there, which is 3 pivot areas touch, and just say, all right, that's kind of my downward trend. So our downward trend is defined like that. Now inside that downward trend, which is really about the 60-10, the 60-10 has been developed for me. I developed to kind of read into the bigger pattern. This is the bigger pattern right here. That tells me what this is doing. It's a downward pattern. You see how it's going down? Well, this tells me it's going down. And if I went to the 5 minute time frame, the 9-3 would be equal to what this is at that point, or wherever it is. So it's a great little, kind of key, little secret, little look at the markets. Not looking at the 5 minute. We can look at the 1 minute and know exactly what we're looking at. And then, of course, all four of these, we know that we have a couple things that we always want to look for. One thing is called a quad rotation. And a quad rotation is because we have quad, meaning 4 stochastic bands here, well, each one representing a different time frame, the 9-3, the 14-3, the 44, and the 60-10. When we have that 60-10 oversold, that means our 5 minute time frame is now oversold. So we have a 5 minute, 1 minute, 3 minute, every multiple time frames oversold, and we always have a better chance of actually getting a bounce there. So we always do look for a bounce on a quad rotation. But it's even better, which just didn't show up as. This was kind of look what time this is too. This is overnight. So these are good moves overnight, especially if you're a prop trader out there. There is activity out there and that you could trade these. This is a big move, 35 to 45, 10-point move. I don't even know what day that was. Thursday. It was yesterday. And of course, that was the some news came out and stuff. But this is overnight. And I was doing a coaching session and it was showing this, showing this young guy, the setups here. Now, here's one of our secrets. Here's one of my tips, one of my notes, one of my rules, right here. I want to go over it with you. Very important. You have a nice downward move in the markets right here, right? Nice pullback. Whenever I see a pullback, I'm always developing trend lines, If we go out here, we don't have that. This trend line is not really here yet, so we can't put that in here. I put that in later on. So there's no real trend line there. But what we do have is this pullback. And I would say, for me, if I'm watching this closely and tick by tick and really focused on waiting for a next setup, I'm always watching what type of trend or channel that we're developing. Excuse me. Talking too much here. Another thing is we use the closing candles. Don't use the extension candles unless it's blatantly obvious that you should. But most of the time you're going to use the closing candles. That these little candle reachers, these feelers that come down here, the shadows, call them what you will. They come down here, grab some stops, grab whatever's down there, it comes back up, and usually this will give us a divergence too. We'll be able to see that the stochastics didn't maybe rotate all the way down deeper to what it was back here, and you get that minor divergence telling us we're going to have a minor move up. And I think we did that. We actually had that, and we talked about, even though look at the channel and look at what you have to do. So this is key. This is where you're going to either make it or you're going to lose in trading, because you're going to get opportunities, but not all the opportunities are going to be great opportunities. And some opportunities are going to be, all right, you took a little shot here, you got a little bounce, maybe 2 candles, it's back under here, it got overbought quickly. Are you going to say, well, I'm break even right here, it's starting to come back down? Am I going to hold on to it because of the divergence, or when should I decide to get out? Why am I getting out? If that's a divergence, why should I get out? Well, first of all, you're in a downward channel, and you're in that was very hard to determine that divergence, but the key was that rotation. When in doubt, get out when the 9-3 gets to 80 in a downtrending market. Every time the market's downtrending, that's usually key with the 60-10 is either pointing down or embedded or somewhere down in that 20 zone. If that goes down and this goes up, this tends up to be a bearish flag. And there was just a little bear flag here, and it coming off of that little divergence. And it kind of turned right over again. Came down to the trend line again, and then what happened? Then we put it in a 14-4 divergence, a very steep 14-4 divergence right there. And what I want to show you here is something that I don't talk about too much. So this is kind of a special video. So we kind of talk about, dissecting the market, understanding how the market moves. But when you really want to strike, you have your cards and you have your good hand, you have everything lined up, you have your pitch, you take your bat, you take your swing. All right, this is where you take your swing. Stocks just like something like this. So this is an interesting. I want to talk about it right now, Johnny. I get excited for this. It's such a good. This is a 9-3 and this is the 14-3. I want to show you what I wrote on it to kind of really confuse you. The 9-3 is most common. All right, this is on number 6 here. 9-3 is most common, but plus the 14-3 for confirmation is common also. All right, a 14-3 divergence without a 9-3 divergence is rare and powerful and should always be taken. So what do I mean by that? All right, it means typically we get a 9-3 divergence. It's faster. It usually gives us a better divergence or a quick divergence. A higher divergence, it happens faster. So if they got the rotation going, this would bounce a little higher and a little faster. And then we see possibly a 14-3 confirm that. In this case, this came down under the 20. This one rotated way above the 20. Again, I fall back onto, you believe in that. I've been in this market a long time. Every time I see this setup, this 14.3 gives me a divergence over the 9.3. It works. It's a bigger, more explosive move. Um, and it's probably, it's like the tweet. It's a better time frame. It's a little longer. You have a little more time in there, so it works really good. But it's just, you don't see it too often. But when you do see it, this is type of, look at, we had this nice move off of this. When we came down, we had a divergence. This was a divergence low. You would put your stop in right here, and and you probably take it off at the 50. Maybe even up to the 20. Depends where you get in. If you get in here, pretty close, then you're probably taking it off up against the trend line, just because you're in the trend line. Now you say, well, you left a lot on the table. Well, taking partial profits are always important, and that's where I might not be the person to tell you to take it all off here, or to leave a little on. We don't know. I would always say multiple contracts are important because it gives you the option of taking some profits and moving your stop up to break even. Lots of times break even is not good enough and the price comes back down, hits you at break even. Doesn't come down below the divergence low. That's really safe. So sometimes you initially put the divergence low in there, you take first profits and you say, all right, this is a strong divergence, I'm going to let it run. Or at least give yourself a little bit more. Like usually it's going to hold the 50% mark between the divergence and when it started coming back down. It probably won't go underneath 50% of that move. If it does, then get out even before it takes it out. It takes out the lows. Oh, my throat is getting hurt. Sorry for me gagging on the mic. Not very professional, John. Slap those lips too on that. All right, sorry about my radio manners. So market here gets a nice move off of that. If you happen to catch it, that was an explosive move. And that was at night too. Look at this. I'm telling you, these things work at nighttime too. It's not going to be all the time. Some weeks are going to be better because of news. But there is going to be opportunities. I spend a lot of the evenings here at the office trading, so I welcome you to, stick around. I usually have the show on also. So markets here going on. This is overnight. I'm not trading these hours, but I always go back and review. And I kind of like when I'm during the show, I'll say, all right, here's 3 o'clock at European Open. We started to come down off the 20. We started drifting back up. What do we have? We have a rotation up, and we had this as embedded down here. That's our textbook bear flag, right? If it holds under the 20 and it pushes up to the 80 and this stays down at the 20 line, that is more of a bear flag. The key is it did drop hard, so you still have a lot of momentum in there. The little bounce and then a rotation down. Bear flag, very easy to spot. You got to take that. So what are you doing now? Now you're twiddling your thumbs, waiting for another setup. We come down here, we have what we call a quad rotation. But the quad rotation doesn't really bounce too much. Got a little bounce and then kind of came back down, and really just not, this is 4 o'clock in the morning, not really doing much. Got another quad rotation, but no really way to kind of say that's an easy call there. I wouldn't, I don't see a divergence or anything. All right, here we had, and this was really nice. This was on the SPY this morning. Now, if you're trading pre-market, definitely look at your SPY. If you see a divergence like this, I want to show it to you. This happened at 6:20 to about a little before 7. And now we're going to look at the 5-minute time frame on the SPY. Let me open this up a little. All right. Right there. So I looked at it when I came in, and I said, "Damn, that was a moneymaker right there." Let me get the So here's the 5-minute, right? So I want to move over. You see it right here? So right here you have a low and a lower low and a low, and look at how high this higher low is here. I mean, if you see that anytime, that type of perfect up, down, big candle, reversal candle, higher rotation there. This is a 5-minute candle. This happens to be 5, 10, 15, 20, 25, 20, probably an hour upside. You're not rushing or really stressing out this trade. And then there was some news here. There was these one of the economic inflation indicators came out, PC or something, and that popped, and then we came back down. But again, we're not worried about trying to catch a falling knife here. I really am not. I don't want to try to play that game anymore. I know it works. I know what works. We have to wait for it to show up. That's all we have to do is wait for it to show up, and it's not going to be, and do you have that issue? So I've been trying to develop some things to kind of make sure we don't miss those. The Futures Traders Audio Network. I'm doing the best I can on that. I'm going to be more active on it because I am taking more of the trades online and not putting it out because they happen so fast. Sometimes I just jump on the trade and more concerned. But I have a desktop app now. I think I could just talk. I could give those alerts through my microphone also. It'll be much easier. So I'm going to implement that, and that's using the Voxer system. So again, if you want those high probabilities alerts and you're not a member of Day Trading Radio, go to patreon.com/Day Trading Radio, and you'll see it there. It's only $20 a month. It's kind of a rollout because it's kind of a new feature, but it's really blown up. And it's and again, I just kind of throw those these setups when we do have a high probability setup. That's what I send out on this alert system and it comes up on your phone. The phone talks to you like a walkie-talkie. Anyway, if you're a member of Day Trading Radio, get that. So make sure you already have it. If you're a member of Day Trading Radio, you have just have to sign up, get it downloaded on your phone. It's a free app. Send me your username, your Voxer username, and your email or your username at Day Trading Radio, and I'll put you in the system, and you can start getting those. So again, let's say that was a great 5 minute. That 5 minute can't be. You can't miss that. I mean, we're not there at 5:30 in the morning, but that is a nice divergence there. I wonder. This was, again, 6:45, 7 o'clock. It was a little before. It was just me getting up. I wasn't in front of this. But you know what? I'm curious. I do have a script running on the Rockbot channel, which runs around the clock. All right? So this looks like a really good thing. So if you have the script, like the good thing about that is not miss. Let's see if the script picked it up. So this is on the Rockbot that runs on the Rockbot channel. I have it set on the ES here, June contract, 5 minute quad signal. What time was that on? Let's see what it was. It was about 6:50, right around 6:50. There's something there. Oh, there it is, right there. Look at that. Right before 7 o'clock, 6:50. The super signal long. Now again, I don't have the parameters hit set. You could easily put this in a trailing mode where it's going to capture all this. And when we do that, again, if you have you have to understand that's what this is used for, to identify. You have to set the parameters to really take advantage of the moves. So if I said, all right, watch what I have on here. Right now it's set to a very tight. It's just really a marking the spots and letting us know it has 5 contracts. It takes 5 off a point. This is ridiculous. A point and a tick. Point and a quarter. Taking 4 off. It's really it's not even, I have it even set up wrong here. 5 lots. It's taking 4 off and then 2 off. It's not even set up correctly. So I want to actually, what we're going to do is we're going to keep the 5. We're going to keep 5 here. And because it's a 5 minute time frame, we're going to make that, we'll make it 8. And then our second profit will be like 16. And then we'll take profit 1 tick, 8 ticks. How many we're going to take off here? We're going to take off 2, and then 2's coming off, and then we're going to have a trailing stop. And our trailing stop is going to be much wider too. So let's put our trailing stop in. Signal bar low. Trailing stop starts at 1. Our trailing stop is going to be, let me give it some room here. We're going to get 20. Let's just see what shows up here and how it handled this. Boom. All right. So there it is. Look at that. So it took it, first profit, second profit, and the trailing stop caught all this, and finally it got stopped out all the way here. So again, you can see it captured all that move. That was the divergence at 5 o'clock. Now, not everyone's going to be setting up like that. This one actually did not trigger. What time was that? That was 11:15, right before 11:15. Let's take a look at that. Oh, wrong chart. Move that back over here. All right, where am I here? Sorry about that. $11.15. All right, that was a little grind out here. I know what was going on here. This was the drag. Remember we talked about this? There was a falling wedge pattern. We said this would probably be a good signal if we capitulate out of this. Typically, this type of narrow falling wedge seems to be just drifting. What we do is kind of spill out of there. We spilled right out of there, and then we reversed, and that reversal was it. That was the bottom. That was it. That was the low. And as you can see, there really wasn't much there to identify anything. It just came out of the ground like a zombie. You know, we were embedded on all four. It wasn't really a divergence. It was just flat line. What it was also, I think it was close to a double bottom. Maybe not. It was down lower than a double bottom because I don't see the low there. But it was 52.05. Yeah. Well, anyway, that started to move all the way up. Had a little flag here. That was kind of a beginning of the bigger move. So remember, where flags are 9-3. We're looking for that rotation. As long as the 60 is pointing up or embedded, that's typically a good sign for an upward trend. So you want to buy the pullback. And again, you have to buy into the weakness. You can't buy on the breakout. Was some weird something here was going on, and there might have been a lip divergence here. There was a little lip divergence here. We talk about the lip. It's kind of a small pullback. It gives you a low and then a lower low, but a little higher low on that 9.3. Sometimes on the 14.3, you can see it started to turn back up here. You can see a slight angle to the upside. It's almost like a 15-degree angle, and that low came in. It was very hard to read. I put it out there. If you got in it, you did well because it was a flag. It was holding the 200. And then we got through the VWAP. We came back. We chopped around. Eventually popped. There was another good setup for today. I did a stop, what I call a buy stop here. And this was an orange line. Whenever you see an orange line on my chart, that's something that we put in manually, and we extend it. Orange means it means something big. So I was watching this orange line. I went back, looked at it back here. We tagged it back here a bit. Right back here, we were holding on to it. But I went back and looked at the history of the orange line. It was pretty good history, and it's a big whole number. So we banged up at a couple, we're coming into the end of the day, right? And we're banging up against it. Here we are, right here. So I said, if we get through this is going to pop. So I put an order in right at 52, like 52.51, just maybe not even 52.50 and a half. We're just getting over that area of resistance. And look what happened. It exploded on that. Of course, I got just a couple points, but it did go up about 40 points. But a good technique, and that's how we ended the day here. But, the object there is understanding where we want to be in. Lip divergence. Again, sell divergences that turn into bull flags are very important. If this was a little divergence and we saw this pulling back, but we saw this was holding above the strength and you got down oversold here, you're going to look for a move back up. Now this kind of broke down to the 20. I think we remember doing this one, but it came down to the 50 and it held the 50 and the trend line. It just happened to do that. Sometimes that happens. There was even a micro lip. That was a little harder to read into because it did break down to the 20. And, let's talk about, being true to the method. So but today was a little bit more difficult because it did have that big bounce, It never really gave back anything. You had to really try to get the pullbacks if you're going to go long. You wouldn't want to go short this strength. That really was a difficult, they squeezed it at the end of the day. Really here was a lot of pain for the shorts, 52.40 all the way to 5,300. And then at 53, we did pop through that 5,300. We took that trade at the end of the day also, which is good. It was kind of just a breakout. I just thought we could pop through that. It was just so strong into the day. I figured they're going to squeeze them a little more. It got up close to 53.10. And then we just settled in here at the end of the day here. Starting next week here, we start June. But I got to just continue to go back and say, let's take a look at our rules. That's what we're going to take a look at our rules. And also, before I forget, it's probably too late in the video. You guys probably hung up already. I'm going to look at the rules now, but the coupon, the Apex coupon, DTR Apex coupon, DTR Apex, APEX, DTR APEX is a coupon code. It's still good for 90%. They extended it for 3 days. So that 250,000 is still available for $16.70. $16.70, $250,000 account. And it still has an $85 activation fee. So, and a 1-day qualification. So, Monday you got to qualify. Go for a broke on that one. But I tell you, take advantage of those coupons. They are good. The 90%. Who knows? They're probably going to be back down to 71. Let me see if I can throw them up on the board here fast. I think the Bullinox, I'll give you the Bullinox too, but I think they expired today. That one is gone. This one, that 490, that 475 sale is gone. No longer. No more. That was a good one. Let's remove that. I'm going to remove that. No more. That's this one. Yeah, this one is still good. The 250K account, only $16.70, and all the other accounts are 90% off on all accounts. The coupon code is DTR Apex. DTR Apex. That's a good one. That's good for 3 more days. They extended because of the issues they had with the rhythmic. And you could try the one for Bullinox. They were trying it today. They might have extended it too. Is DTR 90. DTR 90 is the Bullinox one. DTR 90. And they had a 250K one too. 250K was DTR 250K. Let me see if that's active still. I'm curious. All right, here I did. I put it 250K. Looks like it's still active. So we're gonna go down to. You have to put it on the 250K one though. Option 1. Let's see if it changes the price. $15.85. Takes $500 off of it. Now remember to cancel it after the first month, please. Cancel it after the first month. Put it on your phone. I can't stress that. Unless you qualify and you want it, then you're gonna have a $250,000 account to trade. But hey, that's an option. All the other ones too, the DTR 90, probably still good. It's good. And the 50K account is $17.50. That's a good one. 25K one is $14.50. Yeah, you're not going to beat that 90%ers. So DTR 90 on the Bullinox, still good. Maybe until midnight. I'm not 100% sure. But I know it's supposed to end sometime this weekend. I thought it was I thought it was the end of the month. All right, so that's it. That's done with that. So I was just going to go back a little bit further. Oh, I wanted to look at the rules here. So these are the final rules. Sorry, I got a little sidetracked there. So let's take a look at a running divergence. I don't know what happened to my... All right. Running divergence must be taken if you get stopped out on the first signal. So what exactly is a running divergence? Let me bring that up for you. All right, so a running divergence. This is a running divergence. I can put that on the... where you have a low. Let me move that over a bit. I think I can make it bigger too. There you go. Right, looks pretty good. So you have a low and then a lower low, but that low and the higher low didn't really work out because he came down and put down a lower low. And that lower low took out the lows. And typically we want to have our divergence stop at the low of the first divergence. So you should have gotten stopped out of there. If that turns into a higher level divergence, you have to jump right back in. You have to. It's just a shakeout. And it's proven that way because again, me being in the market, I know these certain setups. This setup plus it was a quad rotation. All right. This was still heading down here. This wasn't a quad rotation yet. We got that bounce, failed one more time. Then it was a quad rotation, coil. This was one of the best setups. It's what I call a super signal. It's a combination of quad rotation, running divergence, basically. I mean, it is. It's the super signal. There's about 3 super signals. Quad rotation divergence, quad rotation running divergence, quad rotation coil. And it's kind of a quad rotation trend line or a VWAP. Sometimes it's usually a channel line retest. But those are the main ones, the divergence and the coil. And the quad, then it has to have the quads going for it. So it's very important to get back in. Excuse me. So next rule, so it's getting late now. Next rule, 1, 2, 3 channels and trend lines are perfect trades when broken in the retracement to the original broken line. And retracement to the original broken line. All right, let's go over that. This is very important too. I guess I wouldn't give you anything that's not that important. So, just like this, anytime you have an good established line, even though this will broke down, even if you break down through it, when we come back and test it or touch it in any way, from the underside or not, it continues to hold, I call it the integrity of the line. That strength is still there. Even if it's broken, it's still there because the algorithms are all calculating these pivots. Pivot here, calculate, put a straight line to infinity. Anytime the price comes down to a line here with the X and Y axis and they come across, activate trading strategy so-and-so. And you probably get certain reactions off of these things. But this is an excellent trade on the rebound up. So the first test of anything, even if you break out and come back to it. Now, if we get back into the original channel, let me see. I didn't extend that. Let me see. I don't have an underside. I never looked at the channel on the other side. But here, this is another example. Just remember, this is with that falling wedge pattern. We expected that to kind of break out. First of all, a falling wedge pattern breaks out of the 65 to 75 percentile area of the pattern. It will break out. All right, if we extend this pattern to a point, that would be 100%. If we started off at the top, that would be 0. You go to halfway, that's 50. You go to 65 to 75, and that's when a wedge pattern, 90% of the time, breaks out. So if it doesn't break out in that level, it's going to go down. It's going to capitulate and go down. But that trend line is going to be important because we're going to come back and test that. In this case, we came back and tested it a couple times and then broke through it and came back and look at where we touched. We came down with a wicked candle right there. And we just snuck down and grabbed it. and it was right at the point of the wedge. I mean, that was our wedge point right there. I mean, you can't make this stuff up. Look at this. I want to make this color a little different so you can really see it. What color should I make it? Everything, I have so many different colors on here. Purple is just, nah, I'll do it this color here. There we go. That one, and then there's this one. I'll make it a little thicker. All right, so here's the falling wedge pattern. Not bad. I mean, it's really, the bottom trend line is good. We break down through it. We come back, then we come down to the point, right at the point right there. Look at that. We came down tagged. That is like crazy. And this line came right up here and crossed the point of these two trend lines. I mean, what a spot that is. What a spot. The stochastics were looking up pretty good, 60-10. This wasn't giving us much, but it did rotate back up. I didn't really point this out at the time, but now looking back at it, you're seeing this, the point of two channel, a wedge pattern, the rising trend line, the flag, the strength, excuse me. So that was a nice flag, a nice bounce, a nice candle, reversal candle, and off to the races it went. And I think we were looking at it this way. We were looking at it as a flag. I was looking at it as a flag. What if I took that? That was at 1250. We did. All right. Sorry about that. Just mixing out. So again, flag, and then we started moving back up, and then the market never really came back down. But that was the that was the concept of that. Let's go back to that rule one more time. Make sure I'm not straying here. Oh, I was going to show you the 1, 2, 3 pattern a little bit better. I wanted to show you a better example of that. But this is a good example too. I mean, you have a kind of a 1, 2. This is kind of a channel. I didn't put this in here. I always drop this is kind of a straight line right here. I just dropped it down there and extended it. I dropped this one down to the low here and just let it ride. It did get through to this level, came back, it touched it for some reason. It must have been good. It was two little pivots there, this where and right there. It was just something to put in there. We touched it again, and these are trend lines that we continue to watch. So if we ever came back down to those, but in this case we did. We came right back down to it and bounced off of it. That was, and again, you can see we got oversold. And the 9-3, 14-3, not the 44, but the 2 there. It was just fine. Things are getting a little choppy going into 3 o'clock. And I'll show you some more if we see them. I want you to go back in time a little bit further, because channels are so important for me. I want all my setups to happen inside of a channel. If I see a channel like this, I'll just throw lines in, just like this. I'll just throw the lines in there like that, and just wait for something to appear. If it get down to the lower trend line with the divergence, I know. If it don't and it gets away, it gets away. Because I know I'm going to have my trade when it comes to me. I'm not going to miss it. All right, let's do the next rule. It's hot. Divergences are defeated by bull and bear flags. All right, I've gone over this. This is a very important rule. Kind of determine if you, again, sometimes you will see a divergence fail. Maybe it's a topping divergence, and I'm looking for one. It's not very often they fail, but when they do fail, there's a certain setup that we look for, and it's basically the formation of a flag, a bull flag. So we're going to look for a sell side divergence here. Sell side divergence. Nothing there. I want a good sell side divergence. Really, there's a flag. There's nothing there. My luck, I can't find any. All right, maybe there was a little. I was looking at maybe a little divergence here. Not much. There was a little dip. I was looking at that candle. We started pulling back. This was pushing up. That's not a good example. A little bit better example here on the, well, that's not really a steep divergence, but the object is to get that divergence and take it off on the first rotation no matter what. So at that 9.3 you get a divergence and it gets down. If this is actually the 60-10, in this case it's not, but if the 60-10 is embedded to the upside or heading up, then there's a better chance for this to continue and take out the highs. Now, there still is a good chance for it to bounce, which it did, but it eventually kind of moved back down a bit. The key setup, like I said, the key setup is watching that 60 be embedded. Here's a slight divergence right here. You can see it right there. And you might say, all right, I see a little divergence there. I'm going to get in here, and this is where you're getting in. And you don't have much room here. But once it gets oversold, like I said, if you get in doubt when the market's not really moving around, and you don't really know what you're doing, but you see there's a divergence, you have the itch, and you want to get in it, force yourself to get out when you have a 20-20 setup and your 60-10 is embedded, because most likely you're going to get a bounce. Even that little bounce might shake you out if you didn't have a good entry. You could be getting out of there. And this is kind of a boring trade anyway. But this did give you a little pullback, and then it just kind of got sloppy here sideways. Who wants to be in that crap? And again, that was kind of the last couple of days. This has been kind of a more difficult trade. The the typical divergence setup that I like to see has not been, we did have some news the last couple of weeks, but I know there hasn't been the setups I really want to see really to tackle for big gains. But we've been doing good and knocking, chipping away at the markets for what the market has given us. It's been still pretty volatile. The next week we're back to a full market week. You remember I wanted to talk to you about the lip divergence for a second, even though this is its own lesson plan. In its lesson plan, a lip divergence is a fast little move. It's just a little bump. I don't know why I call it lip, but I did, and it just stuck, right? And we're looking at that, just that little, usually happens like this. It kind of pulls back, little bump up here, very hard to see. That candle comes out, takes out the highs, and then measure that candle. When that was moving down, you see right there, the stochastics were down, pointed down, right here. They were pointed down on that one candle that took out the highs. It never turned up. It never bounced or anything. It was very, very weak. A very low stochastic on a high. Very steep. And that was the beginning of the end. That was the beginning of the end. It was interesting to see that, such a steep divergence. You can't see that anywhere else. And if you do, then it's a divergence. All right? I mean, it is what it is. So this is on the I'm using the Ninja Trader chart right now, just to kind of show you this on the Ninja Trader chart. Let me move this down a little, because I sometimes see things better on it. And again, if you're using the Ninja Trader chart, you remember, I'll send you my template, Day Trader Radio. If you remember, the Patreon too. If you do get the Patreon, I'll send you this template that has everything already lined up for you. This is really nice. Nice little quad there. Again, quad rotations. Just again, beautiful charts. All we're doing is looking for one type of setup. And if we have a trending market and we really blast off of the 20, then we're looking for flags. This is really choppy. And in choppy markets, we go to one of our last rules right now. In our choppy markets, this is what I usually say. When in doubt, get out at the 80. I've talked about this a little bit before, but one more time. If you're chopping around and you're just taking positions, you're not expecting too much. If you get in, remember to get in with your time frame. Don't buy on an over, when your 9.3 is above 80. Most of the time, you're going to get that pullback. If you're going to do anything, if you're itching to get in, just wait until you get a rotation. The odds are, and if you have a choppy market too, the odds are you're probably going to continue to be choppy, and you're probably going to push back up a little. And these are not bad moves. 42 to 45, 3-point move. You could easily get a couple points out of this move if this is a quad rotation too. That's even a quad right there. So the best setup there is the quad rotation divergence. So we always want to, everything is better with the quad rotation. So whenever we have a quad rotation divergence, and that's a rare setup, but it's not that rare. It's maybe shows up maybe once a day. If you're lucky, maybe twice a day sometimes. They're usually the biggest moves of the day. Usually biggest moves. You have a combination of the 5-minute and a divergence. Now I'm going to go back and we'll probably end the video just looking at one. Lots of times when I do coaching and stuff, we go over video. I'll do a fast review of a chart like this, and I'll ask the person to kind of point out where you would buy and show me the divergence. There's a divergence here. Where is it? And I'd have him him or her find it. Or what's special about the chart? Where would you want to be in, and where would you want to be out? And kind of like little quizzes like that. Really helps. But again, and there's going to be days when you shouldn't trade, and I think that's that's important for this week. There was a lot of like today, very strong trend down, very strong trend up, very hard to counter trend thing. No real setups. I mean, we had a couple flags, no real divergences today. And there are going to be days like that, and maybe it's because it's a Friday, maybe it's because it was a shortened week, and we trended really strong. There were some algorithms and things in charge that we typically don't get to chop. We like the choppy markets. I like the choppy, the market. Here's a little lip here. I don't know if you could see the little lip. Very hard to read into that. But like I said, with the experience, you will start to see that. You'll see that little higher low on that 9.3. And the price was pretty much sideways. It wasn't really a spike lower. That's all we're looking for. Just a little change, little lip right there, so that instead of the sharp angles and the pops, it's a little dip and a little pop, and that stays good. And it usually gives us a little pop in the market. This is not a lip back here because you can see it's not really. You want to draw that line, even on a small case like this, in a small chart like this. You want to draw that line and really kind of show you that it's a slight divergence there. It has a little angle to that line. You can see it now, right? You can easily see it. I could probably lift this sign up a little bit more like that. That's a pretty decent angle. Not much. I don't want to get you guys too overwhelmed by these little things, but that's just something that if you do happen to have a lip inside of a channel, what we like to call a channel lip, that's usually where we break out, so you have that. And now you can actually see where the channel lip is. It's right here. That was that little candle lip there, right there. That was it. It was actually a great one. Think about it. Of course it was. I wouldn't pick out, and again, that's the only time that's going to show you that. So these are the opportunities that you got to wait for. You can't trade any other time. I am telling you this. Get yourself a trading sponsor. If you feel like you need to push the button, call your trading sponsor. Call me. I'll talk you out of it. Most likely it's going to be the wrong thing. And if you do have to push that button, make sure you're pushing it with the 9.3 on your side. It just helps. It's half the battle is being on the right side of the market. You don't want to be it's breaking out, but it's also overbought. You go long here, you have to wait all the way through all this aggravation to get up here. And maybe that's what you're doing. But I like my trades the last 5 to 7 candles. That could be on the 1 minute or 5 minute time frame. We like to get a fast move, 2 to 3, 4 points. We get a big move, that's great. If we have a 5 minute divergence and I want to take a bigger position, I will. Until then, the thing. Also, before I forget, if you happen to catch it to the end of this video, I know I'm doing the copy trading still. I had to reset everyone's copy trades because they updated the software, and when you update the software, it doesn't hold on to the replicant IDs on the internet mode. I've been working on that for the last 2 days. I know I've been not doing a good job with the copy trading. It's been harder than I expected to keep this thing going. I updated the software. I got everything set up. plan to go 2 dedicated days next week. I'm thinking of doing an Apex Monday and then get Bullinox Thursday. Get these guys on. I'm going to trade the things, and we're going to do some giveaways and stuff. I'm going to reach out to them. I think it'll be fun. But either way, I'm going to start dedicating some days. That way we don't have to worry about me. We'll just dedicate a day for copy trading, and we'll just use the copy trade the whole day. Instead of not taking, doing the other stuff we do during the show. But we have to be more focused on that. So that'll start next week. Everything is set up. I got everyone on Patreon on there. I still have to add people from DTR on, so you have to give me some time on it. But everyone on the Patreon copy trading, because I did open up just for a few people on the Patreon to log in and participate. So I've got them all logged back in. If you guys put everyone should have put their ID numbers into that form that you got as an email. So make sure you had that in that form. If you didn't get it in the form, you need to email me and let me know. That's why you're not hooked up. So that's it. Again, that's the rules. Probably have a couple more rules coming your way, but these are important rules. These are little rules that are going to help you. I should have a 7 in here. I don't know what it was going to be. I did have it. Nothing to do with the volume here. But right now we'll call it 6 rules. I know there's 7. It was going to be 10, but again, I think I'm overwhelming you with some things. When in doubt, 80. Take the 80 off. Look for divergences after quad rotations. That's the best time to look for. Let's talk about that. Just 1 second. Look at me. What I mean by that, look for divergences after quad rotations. When I send out a super signal, I've been sending out. This has been the alerts that I've been sending out. For those out there who are not familiar with the Trader Alert Network, so let's see if I could. Let's see what it looks like.
All right, good morning, traders.
Oh, that's a going.
Happy Friday, it's 9:34. Market started.
All right, that's the market open traders. Let me see. 9:30 Wednesday. Where is it? Thursday. Oh, here it is.
All right, even though the market here still on the lows here, we're starting to set up here. We're starting to put in a base, not 100% a bottom yet. We're waiting for a qualified signal. We are starting to see a slight rotation on the 9.3, 14.3, the upside.
So I'll kind of update you on these setups here.
All right, so we have a quad rotation, double bottom, right off the 52.30 area, but not expecting this really to hold. Not high confidence on the bounce. If we could take out the lows, we would set up for a quad rotation divergence. So we need to take out the lows and hold those stochastics, which looks like we are trying to do here. So keep an eye on this area. Price is 52.35. Time is 10:30, coming up on 10:30, 1 minute away. Actually starting to look
all right, so
to the upside.
So it just pops there. So that's the alert. So let me get rid of that. Stop that, John. Stop it. Be quiet, you now. There you go. So that's the alerts that go out on your phone. It kind of update you. What I want to do is update you when we have a quad rotation. Even if we don't get the super signal, typically a super signal happens when we have a quad rotation. Quad rotation and a bounce and then a failure. That's what I am starting to put out there saying, all right, watch for the quad rotation, watch for the bounce, watch for the failure. And I think it was right about here we were talking about maybe that. And we started getting a little move on that. And it kind of popped a little and then kind of just sputtered out. And that's when we realized that we're in this falling wedge and we're getting weaker and we're passing this. This hash mark here really is the area where we should break out on that. We talked about that wedge pattern. But the divergences and the quad rotations are probably the best setups. And they give you the biggest moves in the direction. And again, remember, trade your time frame. If the trend is down, and this is down here, the 60-10 is down, and you get that rotation, you got to get out. You got to get out. The rotation up to 20, the 9.3 up to 80 is a bear flag when this is embedded under 20 or anywhere around that 20 or facing down. Any of the situations. Any of the situations there. That's embedded. The rotation under the 20, bear flag. Down we go. Textbook stuff right there. And that's all we have to wait for. Hope you enjoyed this video. Welcome to join me here at daytradingradio.com each and every day as we trade the markets. Trade a lot of prop accounts. If you need to get in touch with me, ironaction@yahoo.com. I'll put some links in the video description to kind of help you along. And I'll catch you guys in the market.